Good day, my name is Christel from Frans, Klerk, Independent Technical Analyst. This week we are going to look at indices, and the first one on our list is the J135 index. This is the chemicals index on our exchange, and shares that are included in that index is Sasol, Omnia, AECI and Afrox. We can clearly see that there is a beautiful cup and handle formation. Now a cup and handle is a positive formation, assuming that the support of the handle remains, and that is waiting at 4,789. The optimism around that formation will be off the table when that 4789 level changes into a resistance. However, the optimism of the formation will be confirmed when that resistance waiting at 8,366 on the chemicals index changes into a support. The second good thing about this graph is the fact that my red line, which represents my 40-week moving average, has changed into a support. This 40-week moving average is the long-term sentiment gauge. Above that level, the long-term sentiment towards my instrument changes to positive and below it to negative. But we can see clearly that in the beginning of 2020, as well as here in March 2019, this index have tried to change that 40-week moving average into a support, but it could not keep it as support and sustain it. So now the big test is for 5 weeks, this index has changed it into support. Now the big test is, can it keep it? So we might see a pullback on the instrument, but then the big test is, will that red line, my 40-week moving average, remain a support? And my 40-week is waiting at 6,488. What is the target of a cup and handle formation? It is my conservative target for the formation is usually the length of the handle projected upwards from where my neckline of my formation is waiting, and that means my conservative target is 11,983 on the chemicals index, and the full target of my formation is the length of the cup projected upwards from where my neckline confirms the formation, and that means the full target is 14,729. Construction and materials, J235 is a construction and material index, and the shares that are included in that basket is Afrimat, WBHO and Robex. So we can see another cup and handle formation clearly in the making here. One, my 40-week moving average waiting at 1196 has changed into a support. Now the big confirmation or optimism on this cup and handle formation will be confirmed when 1349 changes into a support. And then the same rules apply. Conservative target, obviously around 1526, and the full target can take this index back to 1641. The big test is my 40-week moving average. What is positive about this construction and material index is the following. The index found support here, bounced, and pulled back and bounced again. But now the big test is, will that previous resistance change into a support again? If it doesn't, and the instrument starts to retrace and change this support into a resistance, that will be seen as lower highs, and that will be very negative for the construction and material index. So the big test to be overcome is there waiting at 1363, but my 40-week 1196 needs to remain a support in order to keep the long-term sentiment towards the construction and material index a support. I mean, if we go back, we can see from what a low base it is coming. Back in April 2018, this index traded around 2574. The SA listed property index, J253, is the next one on our list. And I mean, these are SA property listed companies. And there is a beautiful double bottom formation. Now, a double bottom formation appears where I've got one leg that has found support, find resistance, to retrace, but the retracement takes me back to the same support levels it did previously. And when the instrument bounces, as soon as that previous resistance changes into a support, a double bottom will be confirmed. Now, there are only a couple of turnaround patterns at the bottom of a graph. double bottoms, inverse head and shoulders formations, triple bottoms, or even tweezer bottoms. So a double bottom tells me, hey, the sellers have dried up, there are buyers left, and this might be the beginning of a turnaround story for the SA listed property index. Confirmation of this index will be above 291.98. That's where my confirmation will be. And I've got a nice window there. Now, a window is a gap on a graph. And remember, these are weekly graphs. And that window is waiting between 368.34. Excuse me. The window is waiting between 317.71, which is the low. And that high is waiting at 310.35. A gap always closes. It can take days, weeks, months, decades, but at some stage the share price or the instrument price needs to close that gap. At the moment, my warning of the SA listed property index will be when that red line, my 40-week moving average, waiting at 246.21, when that changes into a resistance. Yes, it is overbought. Yes, my K line within my stochastic looks like it's running out of steam because of the rally it's had. But my 40-week moving average will be my line in the sand to say whether the long-term sentiment towards this index will remain positive. The J257 is the South African Industrial Index, a basket of a lot of shares, Naspers Prosus being the main ones in this basket. And we can see that there is an inverse head and shoulder formation. And it's important to know that a left shoulder, and there can be multiple of them, needs to have a neckline. I mean, you have to have a neck to support your shoulders and as well as your head. But let's have a look there and see where this line takes us. I've got a one left shoulder, second left shoulder. I'm not going to call this a third left shoulder because these resistance levels does not go back to my neckline. So I'm going to take this back all the way to my head, take it to my neckline, and then I've got multiple right shoulders here. The optimism around an inverse head and shoulder formation, and that is what this is when my neckline of that formation changes into a support. And that is waiting on the SA Industrials at 80,674. That level has changed into a support. We can see it went back all the way almost to 88,000 and started to retrace again. Yes, obviously because of the rally, it is extremely overbought, has already started to lose momentum. And more importantly, I'm starting to see lower highs, which tells me that traders are taking profit in the strength and that we might see more profit taking going forward. Now, when will my warning be on the table? My first warning will be when this support level that has been waiting at 80, let me give you that exact level, 82,969. When that level changes into a resistance, that will be my first sign of weakness. And then obviously that neckline, if my index starts to consolidate below that level around 80,700, that will be my second warning. And then my 40-week moving average is the ultimate line in the sand for long-term investors. And that is waiting at 77,690. Below 77,690, the long-term sentiment towards my SA Industrials will change to negative. Also take note, candles imply the price action and the thinking of the informed capital. And I've had in that week of the 9th of November, I had a spinning candle here. And we call it a spinning candle because the tail at the top and the tail at the bottom is almost the same in length. And that tells me that the bulls and the bears were fighting each other. They were not sure whether they want to take this index to higher levels or are they going to continue consider taking profit and take it to lower. Since that week of the 9th of November, this index have stopped making new highs. And every week, and let me zoom that in for you, every week the highs are a little bit lower, a little bit lower, a little bit lower. And that implies lower highs. That tells me that even in the strength or the informed capital is taking profit. And that means that maybe you should as well. But use those levels on the SA Industrials to make decisions. Obviously, above the highs again, we can assume that the momentum to the top can continue and that the buyers will continue to take this index to higher levels and that the full targets of this possible inverse head and shoulder formation can possibly take it out. And the first high of last week is waiting at 84,745, and that ultimate high on the SA Industrials is waiting at 87,588. Above those levels, we can assume that the momentum to the top can continue again. The J259, the DIVV Plus Index, a basket of shares that are good dividend payers. And an example here of a conservative target on a cup and handle formation that has already have reached its conservative target. So at the moment, the only next target for my DIVV index is obviously the full target of my cup, projected upwards from where it will be confirmed, which can come back, take it back to around 285.14. But we know the target doesn't get reached in one rally or one pullback. It breathes and it moves up and down. At the moment, it is overbought. My stochastic is sitting on a 93, which means the probability of a pullback is more likely. Only when last week's high at 237.12 changes into a support again can I assume that the momentum to the top will continue. So not an ideal place to enter the SA DIVV index. Rather wait for a pullback, maybe back to the neckline, depending on where the stochastic is, or maybe even that 40-week moving average waiting at 201.41. The long-term sentiment remains positive at 201.41, but when my stochastic is this overbought, it's not an ideal place to enter into this index. And we can see that that level around 244.92 is critical resistance that have been keeping this index a resistance since July 2019 back to Jan 20. Almost a 5-6 month period where that resistance could not just change into a support. Don't forget to send through your requests for next year's shows. Have a blessed time. Take care.